So when it comes to artificial intelligence, we usually associate its problems and shortcomings to um, its use in day-to-day life, regarding its ethics and its day-to-day consequences. But the aspect that's often overlooked when talking in regards of AI is its financial consequences. Um, no, AI companies has seen in the past um, 2 to 5 years very rapid development, rapid growth in investments and in valuation. The hype around AI companies and things that associates themselves with AI has a stark parallel when we look at history to the dot-com bubble that that happened in the late 90s, where various companies associated with the internet, with the .com domain, um, were massively overvaluated, and hence when it burst, it brought with it um, an economic recession that we saw as the .com burst of 2000. Um, um, so when we look at the .com bubble, it's very similar when talking about AI. You know, the rise of the internet in the early 90s uh, brought a flood of venture capital, which in turn increased the valuation of companies using the internet as its major selling point. Um, there was lots of startups uh, that simply relied on the hype around the internet and such. Uh, that got massively overvaluated. Things like pets.com, things like Webvan and others. Um, and these stock valuations, they were very detached from what these companies were actually worth. Um, so as a result, investors started realizing that the dot-com bubble was just like a massive fluke. So the prices crashed, and what resulted was an economic recession that brought down um, various major companies in the sphere of the dot-com bubble and outside it even. Um, and things like Amazon and Google were struggling very much during this recession period, but the companies that we know of today managed to sort of survive this giant crash and uh, managed to regain their valuations this time more accurate than what was happening in the late 90s. Um, when we look at the present day, there is an explosion of funding in AI startups, things like Anthropic, like OpenAI, and suppliers to those companies, Nvidia, and so on and so forth. These companies, um, they capitalize on the view that AI is some sort of a big development. Uh, the, it's like the next internet, so to speak. Um, we also see like smaller startups that basically just try to sell out buzzwords, things like large language models, um, things like that isn't really based on any true value, but they manage to sell because AI is this big buzzword that people are buying. Um, no, it's a hype that we're seeing that's quite similar to the one we see on the .com bubble a couple of years back, and no, I expect this bubble to break anytime soon because like people like me, you know, people like investors are starting to realize that AI isn't worth as much as it's valued on the stock market, and yeah, I like there probably will be a recession soon when investors start realizing that and start cutting funding and cutting investments towards AI startup, and um, re-evaluating how much their stocks are worth. No, but other than that, there are differences between what we saw in the late 90s and early 2000s, as to what we are seeing in the present day. And the dot-com bubble was based on the internet, which did not really uh, mandate a lot of resources, um, did not really take up a lot of resources in its development, unlike AI, which rely on huge data centers, which rely on real physical sort of assets in order to develop itself. Things like data centers, water consumption, things of the such that sort of backs up its valuation. Um, Also, AI companies usually um, they don't really aim towards public investors, people like the average person who goes out to buy stocks, but they are mostly funded by private equity and um, and big tech essentially. Mm, like and obviously governments are also anticipating this. Um, they might place regulations, rules regarding the overvaluation of these AI startups, and would probably put some measures in order to prevent economic collapse as we saw in the late 90s. So I'm not saying like this is exactly the same. Like we could predict a recession, a market crash, like we saw on in the early 2000s. But I'm just saying that that's very much a possibility, and there are certain parallels that we can't really ignore when it comes to the various AI startups that has been uh, gaining valuation in the recent years.